Hey neighbors, welcome to another episode of Love and Real Estate. I'm your host, Shelly Hibbert, the owner of Changing Ways Real Estate Coaching Services. And I'm so happy to have my special guest today, Joe Niosi with CrossCountry Mortgage. How are you today, Joe?
I'm doing great, Shelly. How are you?
Wonderful. It's awesome to have you here today.
Thank you for the invite. I look forward to this. It's been all
Absolutely.
week.
And I'm excited because we've known each other, gosh, Joe, how long? Almost a
Double
decade?
digits, double digits,
Let's not age ourselves
yeah,
here.
right. No, we'll let it go. A long time.
Yes, yes. And I know that for me, when I first started working with you, you were doing a lot for my clients. And I just appreciate you, and I appreciate you coming here today.
You're always thanking me but when I owe you the thanks.
Aw,
Everything starts with you passing that client to me.
awesome.
And once you do that, your name's on that client with me.
Yeah.
And I never wanted to let you down. I hope I never have, Shelly.
You haven't.
Yeah.
You haven't, and you haven't let my clients down,
Yeah.
which is why I'm always referring them. So every agent has an organization, right?
Yep.
People that they trust to work with their clients, and you're always top tier of that organization for me when it comes to lending. So, Joe, I know that you've been doing real estate for quite a while, right? Real estate mortgage, that is. Tell me, why did you fall in love with real estate?
My real estate experience actually started in the title end. My wife and her father had title company, and we kind of jumped into that. I went from secretarial schools and went into sold those, and then kind of was sitting back, didn't really know what to do. But that time, Darcy and I were an item,
Yeah.
and it was title. And as you in the title industry, you go out and you're bringing in people to give the title work to, which include real estate agents and lenders.
Right.
So it kind of started with that, and I met a guy that was very, very strong in what we called, and this is when it was brand new, which was streamlined refinances, where you could actually get a mortgage and lower the rate without an appraisal and things of that nature. So your VA loan, veteran loan, your FHA loan products,
Right.
USDA government products, you can lower the rate. So that guy, we ended up becoming. I got interested because of him in that, because he was doing extremely well with it, and it kind of sparked my interest, and he kind of took me under his wing, and that's kind of when we started to really grow a mortgage operation. Of course, back then things are a lot different than now. There weren't quite as few regulations, which, as we all know, created a big problem
Yeah.
for all of us,
Yeah.
And
But much needed, though, right?
yeah, well,
Much
you know
needed.
what? That had to come to an end.
Yeah.
It had to come to an end. People were getting into homes that they never were going to be able to afford. And
Yeah.
we kind of survived through that, and all of our group stayed together through all that because we didn't really push those loans.
Yeah.
I mean, when we're talking about here in stated loans, okay, stated where, if you tell me, if I tell you you need to make $200,000 to buy this house,
And
how
I
much do you
say
make?
200,000.
208. Well, then you qualify. These
Yeah.
products were not a good thing for the industry, and the bubble burst.
Yeah.
And
How
we
did you
survived
weather that storm, though? Because you were obviously in it, like during that time. It was a rough time for all of us that were in that
Yeah.
industry at that time. How did you
Absolutely.
weather it?
We weathered it by hunkering down, first of all, at the family level,
Yeah.
because we were a very large operation. I owned a Marinette Financial, and we were a very large operation, but we were a broker. What brokering means is that you get the loan application, but then you send that out to different investors for underwriting.
Right.
Well, the brokers at that point pretty much got the full brunt of why it happened, why this bubble happened. And so at that point, real estate agents, right, and even buyers that were looking for a mortgage, they didn't really want to hear about you being a broker anymore. So we kind of weathered it that way by shifting gears. And then we jumped in. Our whole team stayed together. I mean, that's one thing. Our group we've always been strong together. We went into work as a direct lender, which is different from a broker because you never lose control of the product
Right.
or the loan. You're you know, for many years, our underwriter sat 2 doors down from us.
Absolutely.
And unlike if you have to ship it to a underwriter in California and you got a 3 hour difference and you can't get answers, you lose kind of control of that. But in this case, we decided that that was the way. And quite frankly, it is the way.
Yeah.
It was a good move for us at that particular point in time. It got us through it. As it as slowly but surely the market came back, because you know the volume went down, foreclosures were up. It was a fiasco. A lot of money lost.
Yeah.
401ks, pensions, things of that nature. So
Devastating.
it was a bad time in the industry. But like you just said, Shelley, it was needed. It was needed because they had to shift gears, and we needed more government regulation. I hate saying that. I mean, you know, because I don't want, but in that particular case, the Fed had to come in and do what they had to do to get that corrected.
To
And
protect the consumer, of course.
that's exactly what it was.
Yeah,
Yep.
absolutely.
And also, you know, banks, you know, us, you know, when there's foreclosures, you know, you start selling it, it's the consumer. It stretched everybody. It went and hit everybody. It wasn't just the borrower. Everybody got affected by that. And
Yeah.
that had to change. So the
Absolutely.
guidelines, although Shelley, you and I tell our clients, you know, you get an underwriter will look at something, ask for it. We don't question it.
No,
And we
just
tell
give
our
it to 'em.
clients, don't question it. Just
give
get
it
it to
to
them.
'em, yep.
They're not, at first, I fought that a little bit.
Yeah.
But then I realized how stupid I looked, you know, in terms of why am I fighting something that is for a good reason?
Yeah. It's either you qualify or you don't, right? At the end
Pretty
of the day.
much, pretty much. And things happen through the process. But, you know, our clients, I mean, I learned to let them know, you know, they're not going to ask you, meaning the underwriter, they're not going to ask you for something just to give you something to do.
Right.
We're not going to ask for that, right?
Right.
We're gonna want we want that information to get the loan finalized and cleared so you can buy your home.
Right.
And
Not
it's
only
across
buy
the
the
board.
home, but stay in your home
Well,
and be
amen.
able to continue to pay your mortgage and
That's
not
right.
just put you in a situation where you won't be able to stay in that home that you so dreamed of and worked hard to get into.
Without question.
Yeah.
I mean, the products back then, not to get overly complicated, but you know, interest only, meaning you're not paying anything on principal, interest only, 10-year ARM, pick a payment. So what do so what that meant is like, let's say you were buying a $500,000 home and you went into the interest only ARM, right?
Right.
Interest only adjustable rate, pick the payment. So if your regular payment was $3,000, they would the program would give you an option to pay 1,500
But you were only paying the interest down.
interest only, and then the other 1,500 got rolled to the back of the principal.
So you're almost never paying down the loan.
You're never paying it down.
Wow.
You're only adding to it, somewhat like a reverse mortgage. It wasn't forward; it was reversed.
Yeah.
Like a senior over 62-year-old loan.
And now because it was an arm, did it ever adjust to where
When
you
it
had
adjusted, now all of a sudden your payment was $5,000 a month, $6,000 a month, and that's where your foreclosures came into play. And that's where everything hit the ceiling. It just collapsed across the board. And then you had a lot that you don't see them now, but we were all negotiating short sales and this and that, because as that market hit and anyone could get a loan, there were so many buyers. You'd put your house up for sale,
gone like that?
10 offers,
Yeah.
15 offers, kind of like during the pandemic recently. We had that same fire, you know.
So let's talk about that a little bit, because those of us who were in the market and actually practicing real estate back when it crashed were kind of veterans in the game, right? And so there's been chatter a lot about that happening again, market crashing for years now,
Yeah.
about at least like the last 4 to 5 years, right?
Yep.
There's been talk about it happening, the bubble bursting again, right?
Yeah.
And so during the pandemic, we saw a lot of that where we had multiple offers on homes. It was a lot of competition. There was a lot of inventory. But as soon as inventory came to the market, 30, 20, 30 offers gone like that. And people were getting
Not only
above,
offers, yeah, you're saying it right there. Go
yeah,
ahead.
people were getting above and beyond.
Yeah, I had one client pay $80,000 over the appraised value out of pocket,
Wow.
and I only to get that 2.5% interest rate, and they really wanted the house.
Wow.
Yeah.
So what does that mean for that type of buyer
Well, what
that
it
paid
did,
over? Do
yeah.
they have to sit and just
Well,
wait for
you
the
know,
house to appreciate or?
well, no, because that just set the new comp. Comp meaning values in the neighborhood.
Yeah.
So my neighbor sold his house. I think he had it listed for 730 and got 870, like 140 grand over and above. That was an all cash offer.
Yeah.
Okay. Right away, right then and there, the comps for sale properties took all our neighbors up 100 grand in value. So your neighbors benefited from that, even
Said
though it was a,
thank you for
even though
moving
it
in
was
the
a
neighborhood.
it was false. It wasn't worth that much. And
Yeah.
you would think, we talk about some control things like that. I think, no appraisal. They didn't even need an appraisal. They didn't
Yeah,
care
because they
about the
knew they were paying
appraisal.
over. Yeah.
Yeah, but I mean, that's not a real value. And so we have false equity there, unreal equity. But then homes sold thereafter, and they got close to what he got. So that sale drove prices up in the neighborhood. So anybody else that put that house up for sale were selling it similar to what he got, and there was a comp to support it.
Yeah.
So it's kind of a double-edged sword, I think.
Yeah.
For those that own the homes that didn't sell, they picked up equity there.
So talk about that
Excuse me.
2% that's unheard of in our lifetime. Probably will never see it again.
Yeah.
I know people are hoping, but where the interest rate were from the pandemic to where they've gone to where they are today.
Well, that rate drop was to stimulate. All right. The let's be clear. The rates right now are not in the twos. Okay.
At all.
Yeah,
Yeah.
they're 6.5, 7. I mean,
But
depending on
isn't
when
that
we catch it.
normal though? Isn't that the average?
I don't know about my normal. When I first bought my first house was 17.5%.
I mean, I was 24, mine was 12. So I was like,
I don't know what it
why are you screaming over 6%? I paid 12%.
Yeah.
As long as I could actually afford the mortgage, I was okay.
Yeah. But the prices of the home got driven up and things of that nature. I don't want to tell everybody exactly how old I am, but I'll never see that again in my lifetime is my prediction. Is it bubble gonna burst anytime soon? I don't see it.
Yeah.
Partially because the loan products are based on your ability to pay back. So when you send a person to me and I send out a letter, we're doing what? A full pre-approval.
Yeah.
Okay? So you want that. And all the agents want that. They don't want a pre-qualification. There's a big difference between pre-approval and pre-qualification. Pre-qualification, the buyer goes on an online site. We have it. Nothing's verified. There are credit unions
They
out
could
there.
be saying whatever. At
Yeah,
that
they just
point.
given a letter
Yeah.
and haven't reviewed any documentation. Somebody, say for example, that's self-employed that had a gross income of 150 grand last year, but when they did all their expenses and had to take that off of the gross income, they're only making 20. They go into a pre-application and put 150 for the salary.
You
That's
didn't
unreal.
you didn't really make 150.
Well, you didn't show it.
Yeah.
And so, that's what happens. I mean, you're a business owner. You're entitled to write-offs, and you took them. That's okay. There's nothing wrong with that. It doesn't help you with a mortgage.
Right.
All right.
It doesn't help you get pre-approved.
That's right.
Helps you get pre-qualified, but not pre-approved.
That's right. And pre-approvals, everything's reviewed.
Yeah.
I've looked at in other words, when Shelley wants to take a buyer out, or any realtor, they want that buyer to be in the strongest position as possible. And my letter puts them in a strong position because it states everything's been reviewed. And when you get that letter, we've always settled.
Yes,
High five to that.
absolutely.
Because we're doing, we don't want to rush the pre-approval. Now, sometimes we do. When I think over the years, a buyer was buying one of your houses you had for sale, and things were blowing up on the lender side, probably because they didn't do a real strong pre-approval, right? And then you get it to me, and we got to rush it. But typically, we want to make sure everything's in there, and that, and the buyer knows, their family knows that, and not only that, the seller knows, right? I mean, we got a seller that's getting a letter that's no good, and what I mean? They're taking their house off the market with mine and your name on it. We're going to go to settlement, okay?
Have to, yeah.
Yeah, I mean, I don't, things happen. in our business.
Mm-hmm.
I always tell people through the process, right? Real estate process, okay? A lot of people like to freak out when they're dealing with a situation. What you and I, the reason I love working with you, Shelley, is you freak in. Okay? Freaking out, freaking in. Okay, we'll scratch the freak out.
Yeah,
We solve problems, and they do
absolutely.
come up, even with a strong pre approval.
Yeah.
Something's up, right?
Yep.
And then you get around it, you fix it, and you move forward.
It's about thinking outside the box. We
Yep.
already know that our mission is to get our client to the finish line. And so at the end of the day, if they are pre-approved, we know that they have a good chance of making it to that finish line. And anything that comes up in between,
Yep.
we could figure it out. We can think outside the box. We can find out what the problem is. And like you said, try to solve it.
And you see your tone right here.
That's
That's the exact same tone when there's a problem and when there isn't a problem. I mean, you have that air. You're very good at what you do, Shelley. I
Thank
love
you.
working with you because of that. There's nothing we can't. We have always figured out the whole thing.
I
And
appreciate
a
that.
lot of that happens when you're in. I mean, believe me when I tell you.
Appreciate
I
that.
appreciate
But it
that.
also takes your lender being 100%. First of all, Joe, you've been in the business a while, and so you're really laid back about it, but you're a straight shooter. So if my client is not pre-approved, you'll let me know what exactly needs to happen in order for them to get to that point where they can be pre-approved and move forward. And we all know that pre-approval is what's needed to have that advantage on a home once they see it, to pull that trigger, write an offer, right?
Yeah,
And so
absolutely.
having that complete honesty, because you have some lenders out here, I'm not going to name them, but you know, the client will fill out a form online and they'll say, yeah, you're pre-qualified. Go look for a house, right? And that's just not the truth,
Yeah,
right?
and it's not good for you. It's not good for the buyer. The buyer, once they get under contract, they got $500, $600 home inspection. They got a
Right.
$600 appraisal, only to get to the end and find out they never had a chance. That's a disservice,
Such a
and
disservice.
it makes us all look bad in the industry. I don't even know who. It makes us all look bad.
Absolutely. And like I said, it's for any agent, especially the agents that I coach, I tell them it's very important to get to know who your organization is, your title company, your lender, your inspectors. Who are you going to work with? Because those are the people who are going to come together to make sure and guarantee your client's satisfaction.
I
And
agree.
so when I'm working with you, like I said before, you're a straight shooter.
Appreciate it.
If there's an issue, we all discuss it together. The client, you, me. You don't hold back. You let us know exactly what's going on every step of the way. And a lot of mortgage lenders don't even call you to tell you where they are in the process. I'm hearing from you almost every day or every other day about where you are in the process. And that communication is what sometimes guarantees we get to closing.
No doubt, no doubt. That communication is critical.
Yeah.
For the process. I mean, and this is what I know about you, okay, and us as a team. We also care about that seller.
Absolutely.
The seller's looking to move on with their life. They're looking to use the proceeds to buy that house, and then that guy's buying that house. And next thing you know, you got 3 or 4 deals all piggyback between what we do. So we can affect so many things that a normal buyer or seller have no idea what we're dealing with and what we got to make sure it happens, because we trigger that chain reaction. And it could be 4 or 5 transactions right behind this one
Absolutely.
that are all tied,
It's crazy how
and everyone's staring at us if it doesn't go. Well, we don't like getting stared down. I mean, I want to make sure that, everything, the communication is exactly what you're talking about. And the other thing, and I know we both agree to this, don't sugarcoat it. Right?
it
Isn't that
is
what
what
you're
it
saying?
is. It is what it is,
Yeah.
right? The home buying journey is such a complex journey for anyone to be on, and so being there and being responsible for someone getting through the process and understanding what that process means to anyone, like it's generational wealth for a lot of families, and it's first time home buyers, and it's military families that have to continuously move and be comfortable where they go. Like you take that into consideration. And I don't know about you, but I don't sleep good at night if I know that there's an issue, right? Like
No.
And
There's not
so,
enough NyQuil.
no, because you take on the responsibility of understanding the client's needs,
You
right?
care.
You care. And in this state of the market where we are, there's a lot of agents dropping off.
And lenders too.
And I think the one key in that is the care factor. The ones who didn't really care, just there for a check, there's no space for them anymore. They're getting squeezed out the industry.
Yeah. Yeah, you're right. And it's that evolution of that cycle like that, then when they think it's hot, they'll come back in. But, the bottom line is what you're saying here, is not sleeping at night. Not, this is going back to what you said. I mean, look, if the process is right, the product takes care of itself.
Absolutely.
So we go through the process the right way. The end result, they're going to get their house, right? Do you get paid by the hour?
No.
Do I get paid by the hour? No. Do we work Saturday and Sunday?
Absolutely.
Do you work Monday through Friday?
Absolutely.
Okay, so that part of it makes you, if you're any good and have any integrity, care.
Yeah.
I mean, I'm taking away. Are you ever on a vacation?
No.
I mean, are you ever?
I might be by the beach, but I'm still answering my phone.
I might be at the Holiday Inn bar, but you know what? We do have lives, but timing, communication, it's everything.
Absolutely. Absolutely.
You have a hot market like we deal with. You need that. You need to, and we already pre-approved. We need to make sure we have a letter there, submit that offer, call that agent, team up on them, and get that thing ratified.
Yep.
We're not sit around and wait.
Talking about a hot market, let's talk about the market today. As far as the interest rates are and where you foresee it going from here.
I really believe. Well, we're in an election year.
Yeah.
Okay, and you're traditionally in election year, you'll see rates drop.
Yep.
Whether it's for votes or not, I don't care. If the rates drop, it's better for everybody in our industry, right? The market as it sits right now, for me, the way I look at it is, once consumer, like the rate can drop an eighth of a percent from 7 to 6.875, right? And then the rate drop, and then you get all these buyers come in, and I really think that the market. I was thinking spring, but we're still in a grind right now. I'm thinking like maybe June-ish, you're going to see it open up a little bit more than what it is. I mean, what the big problem right now, as far as what I see in the market, is that people back 2.5 years ago, we were talking about, they refied their loans into 2.5, not 2, but 2.5, 3%. Well, now they're going to sell their home to get an interest rate at 6.5 to 7. That's a difficult decision.
Yeah.
Now, granted, if they sell it, they may get multiple offers and they'll capitalize. What I look at there, Shelley, when you look at it, and the rate may never go down that far anyway, so you might even consider renting it, and having a nice stream of income on that, because the rents have gone up.
Yeah.
But I mean, that we're here to sell homes, not rent them. But sometimes that's best, and the consumer can see through it. It's I believe June. Okay, June would be probably, because they're going to again, it's election season. People need votes.
Yeah, absolutely.
But it's every election season you see something twist like that.
Yeah.
So, hoping that that'll get us off, because like we were just saying, I mean, it's tough for people to give up that rate, sell it to go to the higher rate, possibly never refine back down to that rate.
Right.
So
I don't see it happening, Joe. So
June.
I don't see the rates ever going down to what they used to be.
Yeah.
So my thing is just hold on to it. I get it. People have a lot of equity now. They want to sell. But if you think you're going to sell and get that rate that we had during that stimulus.
A lot of them will do HELOC loans for their down payment too. So
That's true.
You're allowed to do that and rent it out, and start building streams of income through real estate.
Yeah.
They would talk about like 401ks and TSP accounts, your retirement accounts. to the day, real estate's still your fastest growing dollar for dollar.
Yeah.
Real estate. You know, my ocean house. My father and I, we had very close to my father, and he was old school. I mean, in terms of, you know, your 401k, your retirement, don't touch, don't touch, don't touch. And I was like, I wanted to buy that ocean house and I wanted to use that money for that purpose. And we went round and round about it. He didn't agree with my maneuver, but I was of age, so he had no say in it other than he was very adamant with me about that was a wrong decision. But I did it, and you know, I paid the money back to my 401k, which you're allowed to do. It wasn't taxed because it was a loan. It's weird when you're borrowing your own money, but you do. And then what happened for me is I paid that back. I almost paid that house off, okay? It's a $300,000 home. They're selling probably 750 now. And we don't rent it. You know that, Shelley. Darcy and I, but we'll, in our retirement years, it most likely will be that source of income. Now, my neighbor, it's a townhouse, so I have neighbors that are connected. We've never rented ours, but my neighbor told me last year, because we were chatting about it, because somebody had went into theirs. Well, he wasn't there, so I had to go look down at it, but it ended up being a worker. But I said, well, you rent it out? She goes, yeah. I said, well, what do you get for rent? $4,800 a week.
Wow.
A week. Now it sleeps like 14 people. These 3-level townhouses. Yeah. You saw what Darcy did in that bedroom. Yeah. It's like, so is that a good use of my 401k?
Absolutely.
Because I can tell you right now, on 700,000 in a 401k, if you're lucky to rent it from May through September, because September's a hot month in Ocean City still. What is that? 70,000 or whatever it is in rental income. You'll never get that return on a 401k.
Yeah.
I mean, you know, plus the value that we've been able to get out of that. So real estate's still I mean, even though '08 was a little weird, you're not going to see that. Our area, we're seeing, you know, what is it, 5 to 8% in value every year?
Every year. So you're saying what I already know, that real estate is still the best investment to make.
I really
best
believe
return
that.
on your investment.
I really believe that.
Awesome.
You know,
Awesome.
And don't be afraid to use it. Why not take one retirement account and leverage it for a second? We're not buying a car with it, Shelley.
That's going to depreciate as soon as you drive off
that's
the lot, right?
I mean, you know, you're buying something that's going to go up. You're going to be paying it down, and you're building the wealth that you talked about earlier generationally.
Absolutely. So what I've heard the difference, and I kind of already know for myself, but tell the audience, what type of market are we in? I know people have said if you're buying a condo, we're a buyer's market. If you're buying a house, it's still a seller's market. So what type of market?
It's kind of weird, I think. Certain pockets are totally buyer. I have an agent that negotiated all closing costs paid on a house. Wow. One offer, that buyer is going in with the down payment only.
Hey, the last one we did.
Yeah.
I got closing
that's right.
costs.
Yeah.
I got
no, you got way off the. By the way, that was amazing. Yeah. That was just a month ago.
Yeah, it wasn't. It was
so
like 3 weeks ago. I got closing costs.
All this work done.
I got $10,000 worth of work done, plus about 13 items that the seller fixed for the buyer before he even closed.
Yeah. Shelley did a great job on that. That's what's happening in certain areas.
Yeah.
People will get that. Then there's like, I have a buyer that was looking in Edgewater, and there was one house available. And she went from Edgewater down to Columbia and everything. I think she's made 10 offers and haven't been ratified.
Wow.
Now she's expanding to Calvert County. And by the way, everybody, Calvert County, there are not more cows than people, all right? I mean, I live in Calvert County. It's a rural area, and that program is 100% financing. It's like a VA loan.
Yeah.
There are parts of Upper Marlboro and Prince George's County where there's no down payment.
Wow.
Charles County, down in St. Mary's, you know, these areas, southern Prince George's.
Absolutely.
There's that neighborhood in Marlton. You and I've talked about it. Now, I don't understand it because a Metro bus goes through the
But
daggone
it's
place,
still,
but it's USDA approved, rural development. It is 100% financing,
yeah.
and the beautiful thing about that, unless you're 10% disabled or more, where the VA funding fee, or as a veteran or active duty, you get the funding fee waived. The USDA loan is a 1% funding fee. Some of two-time use on a VA loan, what 1% means is that 500,000 sales price, you add 1% to the loan amount, which is now 5,000. I mean 500,000, 5,000, right? Did I say that right? Anyway, on a VA loan, second time use is 3.6% on top of that.
Wow.
It's like adding 15 and 6, $17,500 on top of the loan. So even though it's 100%, that funding fee on both. So that VA loan, now the VA different than the USDA, is your VA product has a very small PMI,
Yeah.
very small. So VA has none.
Right.
So
Joe, it's always amazing. I learn something new every time. We talk often,
yeah,
several times a week, but we always have these conversations and we keep each other abreast of the market from a real estate point of view, you from a mortgage point of view. So these conversations are always so enlightening.
I
Tell me,
appreciate it.
what would you tell a buyer in the market today? What advice would you give a buyer?
Now, spelt backwards, is one. All right. I mean, you're going to wait. You're waiting for what? I'm going to wait for the rates. Okay, well, guess what happens when you wait on the rate? You have more buyers flood the market, and then you're back to what we were happening during this pandemic where you're offering over and above. If you can get the seller to pay the closing costs with a higher rate, let's just say in your case, what was that? 14,000?
Yeah.
All right, take 14,000 and divide it by 12. That's $1,000 or a little over
Oh,
$1,000.
yeah.
All right,
1150 a
yeah,
month.
okay, and the rate increase, right, from 6.5 to 7, maybe $150 a month. How long is it going to take you to recoup that 12? I mean, if you had to pay that 14,000, I mean, think about that.
Yeah.
You're going to come out of pocket to save $150 a month and wait versus get it paid for and then refi.
Right.
So now, look, if you do what you do, the way you did what you did, you're going to get what you get. Is that what you want? And the answer is always no. No. But yet you keep doing the same thing. Waiting, now spelled backwards, is one. Get in there.
Get in
Don't be
there.
afraid. There's nothing to be afraid of. You and I, we're married.
Yeah.
All right. And you marry your house, you date your interest rate. And I know that sounds like a
I get
cliche,
it.
everybody says it, but you're only going to be in this loan a very short period. And the costs aren't that great. On a VA or an FHA type of loan, it's a streamline. You come to the table with one payment and you're out of that loan.
Yeah.
You're out of the loan. So you're going to be out of there. There are deals to be made. You just made one. Now, there on the side, certain areas, there's limited inventory. Okay. Take your circle out,
Yeah.
right? You got to have a strong negotiator.
That's always
I mean,
a
no,
must.
you crushed that last deal. Yeah, you crushed it. I got one settling right now. Agent crushed it. It was like, beautiful.
Yeah.
And that, you know,
And the only way you can do it is if you care.
if you care and,
Yeah.
and you know how the heck to negotiate. I mean, I'm not taking that away from you at all. But yes, yeah, you got to.
Yeah.
You know the bottom line. Look, when I talk to Shelley and I say, here's your pre-approval, here's what they have in the bank, here's what we need, I'll do it.
Yeah.
And they know it, the buyer knows it, and you get the seller to acquiesce.
Awesome.
And that's what you do.
Awesome.
And that
Well,
is-
Joe, it's always a pleasure. I appreciate your insight. I always stay in my lane when it comes to people asking me for mortgage advice. I said, call Joe.
Well,
Because
you
that's the
did.
person
Very loyal
that's going
to
to
me.
give it
Thank
to
you.
Thank you, Joe. I appreciate
I'm doing this. Thank you.
Appreciate you, Joe.
Thanks a lot.
So, Joe, how can we contact you if
Well,
anyone needed mortgage advice like you've given today?
I have a Facebook page, but My email address is Joseph, Joseph dot Niosi, Nios as in Sam, at ccm.com. I work for CrossCountry Mortgage. My cell, 240-793-9300. And like Shelly and I just said, 7 days a week. I mean, last night we were on the phone. I was on the phone with a client at 9:30 at night on Friday night. So you got to be available. We try to be as best we can. I will say this, and I did it once, and I'll never do it again. Sunday, I will not leave church for your call. That was a bad day at my home when my wife got a hold of that one. But yeah, other than that, I try to be as available as best I can.
Well, folks, that's it for another episode of Love and Real Estate. As always, you can reach me at changingwayslc.com or at Changing Ways LC on Instagram and Changing Ways on Facebook. And remember, change your ways, change your life. It's time.